Chinese car companies are starting to do to Japan what Japan did to the US in the 70s. Chinese electric car companies, and especially BYD, are moving to dominate the future car market with electric vehicles, and the time to respond competitively is quickly running out. Even Tesla is at risk. In the 1970s, Japanese car manufacturers revolutionized the global automotive industry, posing a serious challenge to the then dominant American car companies. Fast forward to today, and we are witnessing a similar shift, but this time, it's Chinese car companies that are making waves. Companies like BYD, NIO, and XPeng are not just participating in the market, they're shaping its future, particularly in the realm of electric vehicles, EVs. The rapid rise of Chinese car manufacturers has drawn comparisons to Japan's automotive ascent, but this time, the stakes are even higher, and the competition more intense. The rise of Chinese car companies. China's automotive industry didn't become a global force overnight. It took decades of strategic planning, government support, and relentless innovation. Unlike the Japanese car companies of the 70s, which relied heavily on exporting to grow, Chinese car companies have focused on dominating their massive domestic market first. This has given them the scale and resources to expand globally. Key players like BYD, NIO, and XPeng have emerged as leaders in the electric vehicle space, leveraging government incentives, advanced technology, and aggressive pricing to capture market share. The Japanese automotive dominance in the 1970s marked a turning point for the global automotive industry. Japanese car manufacturers, including Toyota, Honda, and Nissan, introduced vehicles that were not only more fuel efficient but also more reliable and affordable than their American counterparts. This revolution in the car industry was driven by Japan's focus on continuous improvement, known as Kaizen, and a commitment to innovation. The success of Japanese cars was a wake-up call for the American automotive industry, which had grown complacent and slow to adapt. BYD, the game changer among the Chinese car manufacturers, BYD stands out as a game changer. Originally a battery manufacturer, BYD leveraged its expertise in energy storage to become a leader in the electric vehicle market. The company's strategy of vertical integration, controlling everything from battery production to vehicle assembly, has given it a significant cost advantage over competitors. This, combined with the strong support from the Chinese government, has propelled BYD to the forefront of the global automotive industry. Today, BYD has surpassed both Honda and Nissan in global sales, making it the 7th largest automaker in the world. China's strategic advantage is one of the key factors behind China's automotive success is its control over critical raw materials, including rare earth metals, lithium, and nickel. These materials are essential for the production of electric vehicles and personal electronics. By securing access to these resources, China has been able to reduce production costs and gain a competitive edge in the global market. Additionally, China's lower labor costs and extensive manufacturing infrastructure have further solidified its position as a global leader in the automotive industry. The electric vehicle, EV, revolution. The global automotive industry is undergoing a major transformation, driven by the shift towards electric vehicles. China has been at the forefront of this revolution, with companies like BYD leading the charge. The Chinese government has invested heavily in EV infrastructure, including charging stations and battery technology, making it easier for consumers to adopt electric vehicles. As a result, China is now the largest market for electric vehicles in the world, and its car manufacturers are well positioned to dominate the global EV market. Tesla versus Chinese car manufacturers. Tesla, the American electric vehicle pioneer, has long been seen as the leader in the EV market. However, the rise of Chinese car manufacturers poses a significant challenge to Tesla's dominance. Companies like BYD, NIO, and XPeng are offering high-quality electric vehicles at lower prices, making them attractive alternatives to Tesla. Moreover, Tesla faces regulatory challenges and stiff competition in China, which is one of its most important markets. If Tesla doesn't adapt quickly, it risks losing its market share to these aggressive Chinese competitors. The impact of Chinese sanctions. Chinese car manufacturers have faced various sanctions and trade barriers, particularly in Western markets. These sanctions have artificially increased the cost of Chinese vehicles, making them less competitive outside of China. However, despite these challenges, companies like BYD have continued to grow and expand their market share. If these sanctions are lifted, Chinese car companies could quickly dominate the global automotive market, leveraging their cost advantages and technological expertise. Quality issues and overcoming challenges like the Japanese car manufacturers in the 70s, Chinese car companies have faced quality issues as they enter the global market. However, these companies have been quick to address these challenges, investing in research and development to improve the quality and reliability of their vehicles. BYD, in particular, has made significant strides in improving its product quality, positioning itself as a credible competitor to established global brands. This mirrors the journey of Japanese car manufacturers, who also overcame early quality issues to become global leaders. Global market penetration. Chinese car companies are not just focusing on their domestic market, they're expanding aggressively into international markets as well. Europe, in particular, has become a key battleground for Chinese car manufacturers. Companies like BYD and NIO are establishing a strong presence in Europe, leveraging their expertise in electric vehicles and competitive pricing to attract consumers. As they continue to expand globally, Chinese car companies are also investing in branding and marketing to build a positive image and gain consumer trust. The future of the automotive industry. The next decade is likely to see significant changes in the global automotive industry. With the continued rise of electric vehicles and the growing influence of Chinese car manufacturers, the industry is poised for a major transformation. If current trends continue, Chinese companies like BYD could become the dominant players in the global market, pushing out traditional automakers that fail to adapt. The future of the automotive industry will be shaped by innovation, sustainability, and the ability to respond to new challenges and opportunities. Lessons from history. The rise of Chinese car companies bears striking similarities to Japan's ascent in the 70s. Both countries have used strategic planning, government support, and a focus on innovation to disrupt the global automotive market. However, the scale and speed of China's rise are unprecedented. The global automotive industry can learn valuable lessons from this history, particularly the importance of agility and the need to embrace new technologies. Companies that fail to adapt.